So having seen that, you see that this balance CD, it is the cash in hand, having paid and having received at the end of the day. You see that the balance, so that cash in hand, which is 6530, it is the opening closing cash in hand at the end of the day. And you see that that balance BF 3000 is what we use in the statement of affairs as at 1st January 1998. So it is the closing, which is 65. You may not be given, you are not giving, it is possible that they don't give you in the question. But once you are given receipt and payment, you can easily get your closing and opening cash in hand. So that's why we have a 6,530 at the end of the day. So then we have a, don't forget, telephone prepaid is a current asset, is something that you have paid in advance and it has not been enjoyed, so it is your asset. So at the end of the day, you have 85. If you add it together, you have 19,685. Now, let's know whether we will balance our balance sheet at the end of the day. Maybe the figure on this side will correspond with this. So the first thing is we prepare our capital. And don't forget, we get the capital from the statement of affairs, and that is 15,280. Now let's add our net profit. That was the net profit, that was the profit that we ascertained in trading profit and loss account. And even it is net loss, you less it. But since it is a net profit, then you add it. And don't forget, we have drawings. If you look at the question, we have let's look at our receipt, our card book. In the first question, we have drawings of 1,150. So drawings has to be less. You know, the reason we are preparing cash is to know the receipt and payment side, and you prepare those accounts separately, of which we are doing here. So you less it. After that, you have 18,790. Now we go to current liability. We have creditors of 830. Then we also have rent owing. Just look at the additional information. Rent owing, we adjust it. It has been adjusted in the trading, and it will also appear. I told you the other time, 2 treatments will be done for any information that appears in additional information. So it will also appear here, and at the end of the day, let's calculate it. 18,790 plus 830 plus 55. You see that we have 9,685. So that is that. So you have to be very careful when you are in the exam hall. Just make sure that you open your eyes and master this format very well, and figures. Just read very well so that you will not miss any items, because if you miss any item, it will be difficult to balance any account. So that is that, and on a single on the incomplete record. We'll be talking about last theme, which is theme 5, and the theme 5 is the formation of companies and the Nigeria financial system. Under the theme 5, we'll be talking about the topic 1, which is the formation of company. But before we go to the formation of a company, we'll talk about what is company itself. What is company? Company is an artificial person which is recognized in law as a separate legal entity. It is also referred to as joint stock company that makes profit by producing or selling goods and services. And examples of companies, we have the Zenith Bank PLC, we have Flour Mill PLC, we have Access Bank, we have First Bank PLC, and so on and so forth. When we're talking about a company, in as much company has been registered, is an artificial person on its own, of which it is recognized by law. You know, we talk about the accounting concept. which we talk about the entity concept in the accounting concept. We talk about when the company is established, it has become separate legal entity from the owner that have economic interest in it. So that is the same thing applies to that of a company. So company is an official person on its own that can be sued and can also sue any other person. So you can also call it a corporate entity. Now, having done that, we've talked about the company. We'll be talking about the requirements of Company and Allied Matter Act 1999 as regards to formation of company. That means what are the necessary conditions? What are the conditions that require the company to be registered? And before we go to that, a commission that is entrusted to register a company is what we call CAC. I mean, Corporate Affairs Commission. They are in charge. They are saddled the responsibility to register company. So before company can be registered, there are some requirements by Company and Allied. We call it CAMA Act 93 as regard to formation. What are the necessary steps to take when the company is in the process of registry? So for you to register your company, the first requirement that CAC will require from you is the preparation of Memorandum of Association. What is a Memorandum of Association? This is the constitution of a company which governs the relationship of the company outside the world. That means it contains the regulations of company in connection with its dealings with outsiders. There is what we call Memorandum of Association. Memorandum of Association that we are talking about, it talks about laws and rules and regulations that guide company dealing with outsiders. And what are the content of Memorandum of Association? A company must prepare it and forward it to the regulatory body that in charge of formation of company. So what are the content? What are the things that must be included in the Memorandum of Association? Number one, we have the name of the company must be included in the Memorandum of Association. That means the name that the company will bear, maybe Adebola Nigerian PLC, Adebola Limited, or the like. Then the objective of the business. When we're talking about objective in terms of the kind of product the company is dealing with, or the kind of trade that they want to trade. I mean, when the company is going into manufacturing product, there must be a clause, objective clause, in which they will state the type of product that they want to produce in the Memorandum of Association, and it must be stated that maybe they want to produce finished goods like bread, bonfita, like bread, beverages, and anything like that. So it must be. So that is the objective of the business. That why are they creating the business? They are creating the business in order to produce a particular product or for trading activities or service activities. Then the next one is the amount of authorized capital. We'll be talking about authorized capital when we get to issues of shares. But when we're talking about amount of authorized capital, is that in as much a company has been in as much a company is established, it must have what we call authorized capital. That means a company by share. When we're talking about authorized capital, we are talking about a share that is apportioned to a company in as much that company has been registered. So the amount of authorized capital must be stated. That means the shares that the amount, numbers of shares they want to subscribe to the public, the total number of it. They might not subscribe all the shares, but at least they must write the authorized shares that it has been registered with the bodies that are in charge. Most of the time, authorized shares might be more than billions of naira, trillions of naira, and it must be stated in the Memorandum of Association. Then we have a registered office. So registered office, that means the place, the location of the company must be stated in the Memorandum of Association. Then the next one is, having prepared the Memorandum of Association, of which we outlined earlier on, they prepare the Article of Association. What is Article of Association? This is the document which prescribes the rules and regulations governing the internal working of the company. To buttress my point, this article is talking about the dealings of the company with the members of the company that are working. That means rules and regulations that guide the workers, rules and regulations that guide the shareholders, how they declare dividend, and many things like that. So it is included. So there is a rule. You know, a company, there is something called corporate governance, and a company must have it. That means the way they deal with their employees and the members of the board of directors, the shareholders, the managing director, and the like. So what are the content of an article of association? What are the things that must be included? The first one is the right of shareholders. Shareholders are the owner of the company. I mean, a company by share. So the right of shareholder must not be violated, and there must not be a conflict of interest between the shareholder and the manager. So the right of shareholder must be stated. How do the right they have, I mean the right to vote. You know, there's what we call annual general meeting, which at the end of the year they call the shareholders to vote for the board of directors or any people